Hey friend, welcome back to the channel, and if it's your first time here, my name is Billy Chan. So today we are so excited that we have the author of this book, The Hidden Truth of the Stock Market, Loon, together with us to share about what he had wrote in this book about the myth of the stock market and how can you beat the odd, right? Zulun is the fund manager of Trading View Capitals in Berhad, based in Malaysia, and he has been 10 years in the industry, and obviously he will share his experience and also answer the big question from the audience of the 1010 book club later on at the end of the video.
Okay, so yep, the title is Investing Myth Debunk. As you can see from the book title, is that the hidden truth of stock market is mainly to tell you some of the myths that actually been well widespread, whether you have read it before from the online books, from your friends or family. Yeah, some of the myths tend to circulate around the world or around the society for a very, very long time. So I will go through some of the things that's I think that it has a different way to analyze, or it needs more elaboration. Okay, so this is a profile of me. I think Billy have shared. Basically, is from here. I've actually written so-called written 3 books. The first one is actually what Billy has bought, and then the second one is actually the Chinese version, which is the first book that I've written. And then the last one on it is the so-called lighter color version. That one is the second Chinese book that I've written before. And then if you feel interested later, I can come back to this screen and then you can buy with the QR code from here. Okay, let's go to the main topic. The first one, I mean, why I want to write about this book is actually that I have friends or family, I mean, who actually invest in the stock market, or maybe invest in unit trusts, or what you call a mutual fund. So a lot of times they actually see things in one angle from, or I say one dimension. Okay, so but after study working in the finance and investment industry, I do realize that a lot of things they actually very, very different. It's not that what we believe is wrong, it's just that it needs something more. So I do think that in terms of our learning process, we do need to go through at least like 3 phases or 3 layers, the way you look at things, the way you think. So the first one at the bottom one, I call it believe what you see. I have the Chinese also, is 看山是山. So what it means that when we start to learn things, we are blank paper. So when people tell us 1 + 1 is equals to 2, we take it for good, because this is the easiest way to learn. You always learn that way, because, and then when they show you the calculation, okay, 1 apple and 1 apple now become 2 apples. Yeah, that's the way how we learn. So you believe what you see. Okay, but when you slowly progress, you tend to realize that the world is different from what you have learned on the first layer. So, and on this stage, you say believe not what you see. It's like you 看山不是山, which means that you think that things are very, very different, which that from you turn to the opposite side of the world, is that you start to become very skeptical, or to some certain extent, to certain people, they will become very cynical. That things is actually very, very wrong. This world is sick, or the stock market is a con man, it's a con man game, all the stuff. So I have a lot of friends who actually that they have actually reached this stage, which is they do not believe what I have seen so far. But after some time, if you study further or learn further, you actually reach to I would call the 3rd stage, which is the believe what you see. Is that you back to stage 1, 看山还是山, which means is, even though it's the same phrase, but is different from the first layer, is because that once you reach this stage, you have already gone through from blank paper, learning something new, and then you doubt yourself, and then after that you try to figure out what actually you know how to filter things, and then how to look at things in a better, a more, I would say, a more proper, comprehensive way. So you're back to, you still believe that, like for example, stock market is still a place to actually to invest. Yes, there are comment, there are some syndicates, or there are a lot of very weird, dodgy stuff, but you still think that overall it is still a way to actually to generate your wealth. So you go through this kind of 3 phases when you learn any new things or new industry whatsoever. Okay, so this book is actually the main intention is I'm trying to write articles or content that actually help the readers to move straight away to the second layer, or if let's say better, if let's can move to the third layer, which is the top layer. So it's the intention of the book. So I'll go some of the myths that actually which is very famous, circulate around, that will be rich if you just buy and hold. Buy and hold is a very famous quote by a lot of people, is that because that a lot of famous guru actually say that you just buy and hold the stock, you just forget about the noises, because the stock market actually, the stock prices changes every day. So if you're able to ignore it, you sail through all the volatile period, at the end you're able to generate very good wealth. So this phrase is actually telling people you have to endure the tough period. Yeah, so stay strong. However, there are a lot of people treat it differently. They just take things out of context to think that you'll be rich if, let's say, you buy and hold. But in real fact, it may not be true. Okay, let me show you this one. This is a stock market investment return chart. Okay, for this generate from the Bloomberg terminal that we have on our office. Okay, so what you can see here is that this dark line, black color line, is actually public bank so-called share price total return index, which for those who are actually not from Malaysia or not from Singapore, public bank is one of the largest Malaysian local bank, which is a very good performance. They give very good loans, and then they grow very strong. It is one of the auntie uncle's favorite, the go-to bank basically. So this is one of the most famous bank. So you can see the share price actually perform pretty well. So if you have invested public bank, start from June 2000 until July 2000 until June 2020, your annualized return is actually like 14.6%, close to 15%. Which is pretty decent money. Which means that you can see here from all the money you have invested, your total return is 1,400 over percent, which means that 14 times. You put 1,000 in, you get 14,000 back after 20 years. So it's actually very, I would say, very incredible and very impressive. On the other side, the second one is called TNB, which is Tenaga Nasional Berhad. It is the largest utility company in Malaysia. It is a government-linked company which distribute electricity in the Peninsular Malaysia. So basically, it's a monopolistic business. So normally people think that monopoly should be the best way. Hey, a lot of businessmen, they want to monopolize all the industry they are in. However, if you look at the chart here, it actually gives you a very different story. TNB Malaysia, the share price performance is, it still brings some good profit. It still brings positive profit, not that bad, but it really can't compare with public bank over the same period of time. So imagine if you have buy and hold, you actually is a pure luck game. If you're able to buy, if you get a chance to buy public bank, then you get enormous return. But if let's say you happen to buy Tenaga Malaysia, very sorry, your annual return is around 4%, slightly better than some of the fixed deposit rate you can get from the bank, but it's not very good return if, let's say, when you comes to the risk that you actually attached with. So this thing actually trying to give us a sense that why buy and hold? Sometimes it works, but sometimes it doesn't. It's always based on what company you're buying in, because there is the biggest problem with buy and hold advice is that people thought that things will not change for a very long period of time. What they want is a very simple way or simplistic way to actually to invest. They thought that by doing this, they can just get rich. So sorry, it can't, because even humans change every day. So stock market is a reflection of business world. Business changes every day. I'm sure Intel today is different from the Intel like 20 years ago. So yeah, same goes to public bank, same goes to and utility company. Such a very such a boring industry like utility. Also, things have changes a lot. So when things change every day, sometimes it change for the better tomorrow. Sometimes it doesn't. So how are we going to ensure that things is always going to change for better? You have to monitor. So a lot of people just forget about this so-called the important part. What they remember is just buy and hold, and then they thought that this will actually bring them prosper. So it's actually very it's not to say a 100% wrong strategy, but it has a lot of details that is actually missing when people are circulating this kind of myth. So I actually hope people to understand this. Yeah.
Loon, there's a clarifying
Yep.
questions in the chat. They say, is this chart that you showed is also include the dividend returns?
Yes, it includes the dividend return. So that's why you can see here, the second column here is called total return. So the left-hand side here is price change, and then this one is the total return. So you add up both together. So yep, the annualized return, all this is actually include everything. Yeah. Yes, and one thing, public bank is a dividend paying counter, which is why a lot of retirees they like this counter. I think same like a lot of Hong Kong people they like HSBC. Yeah, it's the same concept. So to further elaborate this concept is that why buy and hold may not work in certain situation, because like it or not, we have to admit that Malaysia is a small market. We only have 30 over million population. So the growth potential, is actually quite limited. I mean, you can't expect Malaysia population to actually to flip to become 60 over million. It is very, very hard, okay, with such a low birth rate in Malaysia. So companies who doing business in Malaysia, they listed their shares in Malaysia. If they very comfortable, they don't expand beyond Malaysia market. So at the end, you actually hit the ceiling, which is you will not able to grow further. So a lot of businesses, like for example, like public bank or Malaysia, some of them is Malayan Bank or CIMB in Malaysia, they actually expand their business in overseas market, in the Southeast Asia market. So when we choose to do buy and hold strategy, we always need to understand whether this company has the ambition or the goal to actually continue to expand, regardless how hard the industry is. Yeah, only when a company is able to, they have the vision and they are willing to work their ass on it, then this kind of company or their shares is actually worth the buy and hold strategy. So that's why you need to monitor. Yeah, that's why I say stock investment is never just buy and then you forget about it and then sleep. So sorry, you can't. Yeah. So this is one of the myth that I'm trying to debunk, and hope actually to bring a good benefit for everyone who listening to this. So I will go to the second one. Second one, owning a share means you're also a company owner. For a lot of times, we actually tend to say that owning shares in a company is actually you become part of the business owner, part of business entity. Yeah. So, for example, today I buy an Intel share, so I actually become part of a very very small owner, a fraction of it of Intel company. Yeah. But does it mean that actually, even though by legal or by theory, I'm actually a company part of the company owner, but does it mean that I have a say on the company? So sorry, no. Yeah. Why owning a share means you are also, they're trying to this statement is actually always being promoted by a lot of big guys, because they're trying to promote the idea of a proper mindset of investment. Stock market or the stock is not a lottery ticket. It's actually it's a certificate of being part of the business. So that's why you have to think like a business owner, and then only you participate in the company stock. This is the mindset they're trying to cultivate, they're trying to promote to the public. However, in the real world, things got complicated a little bit. Let me show you some example. This one, okay, one of our most famous guru in our industry, Warren Buffett. Okay, Warren Buffett, Wright, and Salomon. Salomon Brothers is one of the very famous investment bank in the 90s. So it's once dominated a big chunk of the bond trading. So happened to be they got so big and they became so arrogant, so they tend to try to monopoly the market, which is actually against the government rules and regulation, but they just don't care because they think they are so big they're able to escape from it. So what happened is one of the traders they actually did to try to do the monopolized trading. So end up this actually triggers or actually touches the government. So they got very pissed off, and then they say that I'm going to ensure this Salomon investment bank going to be shut down or out of operation in a very short period of time. During that time, Warren Buffett is the one of the major shareholder. So if let's say being a share owners, so if imagine you are mini owners or small owners like me, if let's say I bought in Salomon Brothers shares, you can't even do anything. You can't, even though you know it's unethical, but you just can't stop it because you're too small. But people like Warren Buffett, he can actually remove the CEO because he's also in the board. He removes the CEO. He actually picks someone that he thinks is actually ethical, honest, capable to restore all the reputation of Salomon, and then buy time, because with his reputation and his status, he's able to negotiate directly with the government and helps him to buy time to actually to settle all the so-called try to calm the government down. So at the end, he's able to and then generate a profit. So this tells you that yes, you are the owner. Buying a share means you are actually a part of the owner, but they are big owners like Warren Buffett. There are small owners like you and me. So the shares, the amount of quantity shares you have actually dictates how much power you can actually wield. So this is one of the things. The second one, example I want to bring on is this one. Many people may not be familiar. On the left-hand side, the left bottom is actually Kim Jong-un. Is Park something. It's actually the number one person in Samsung Electronics Korea. And person on the right is actually Paul Singer. He is the founder and actually the investor of Elliott Investment. So happen to be Samsung Group is actually a very big conglomerate in South Korea. Basically one of the very dominant corporate. So happen to be years they have been delivering good result, but they just ignore shareholders. So the share price actually didn't really perform. So some fund managers, like for example, like Paul Singer, after done his analysis, he feel that there are some room to actually for him to exploit. So what he did is actually slowly buy in and then find a way to attack the company. Yeah, I'm basically use attack. It's basically that he'll publicly criticize the company. Because with his status, with his wealth and the shares that he have in the company, he bring very significant impact. Actually, the company, initially they do notice that some shareholders like him are not very happy with that family with the family decision, but they probably ignore him. But until one incident, which is the Samsung Galaxy Note, I think Note 6 or Note 7, it actually has some battery problem. So that battery problem causes that Samsung has to recall a lot of all his handsets. And then after recall, then they try to rectify it, and then they reintroduce it again. Still got problem with the battery. Users still found it's easily caught on fire. So no choice but to recall all the handsets of the Note series. Note series is one of the flagship handset of Samsung Electronics. So that time, Samsung Electronics actually got hit quite badly by the name and by the profit. So this time is a good time for Paul Singer, which is the the man on the right actually to strike his attack. So he actually called a special meeting, and then he actually announced his analysis. He says that Samsung is a good company. However, there have been the organization chart is too huge, it's too bulky, not efficient, and then they have too many cash, which is I'm not utilizing it. In the meantime, they don't return it to shareholder as a dividend. They just do nothing with the cash. They just keep the cash in their bank account. Yeah. So what Paul Singer is trying to say is that actually Samsung, you guys actually treating the company's money as your own money, even though you do not own 100% of the company. So this is the message he's trying to bring out. So under very great pressure, Samsung Electronics actually at the end actually agree part of the pausing the proposal. They return a lot of dividend to the shareholders, then they actually do some restructure of the org chart. So at the end, this is the share price performance. As you can see, this is from 2015, mid-2015 to 2017. So the upper line, which is the dark line, is Samsung Electronics share price performance. It actually generate around 100%. And then the bottom is the Kospi index, which is the Korea most very common index in Korea. Also generate not bad result, 20% over this period of time. But Samsung is up of way too much of the Kospi index. So this is a power I'm trying to show that, yeah, owning a share means you're a company owner, but it really depends how much shares you actually own. Let's give you another example. Is that years ago, one of our local institutional funds, they're trying to vote during the company general AGM. They're trying to vote against the remuneration of the company CEO. Yeah, they're one of largest institutional fund. They vote against it, but it did not go through. They're still able to pass it because they did not able to hit the so-called the majority votes. So imagine like big institution like one of the largest local institution in Malaysia not able to vote against a CEO's remuneration in a company. How much power can a normal retail investor like you and me can actually have on some of the companies, public listed company like Giant? So this is a thing that I feel that it is important that you have the correct mindset. You think like a business owner when you buy into the company shares, but always be mindful that the rights you have, the power you can use is actually quite limited. Is actually limited by the amount of money you put into the company. Yep, this is the second myth. The third one, yes, I think this is a very famous one. Can retail investor, you and me, actually it's actually beat fund managers. It's not bad fund managers. I'm so sorry about it. So it's actually saying, like to show this table. This is a very famous story. Everybody knows it. It's David versus Goliath. So a lot of times, I think we have a lot of misunderstanding, or so-called not a complete understanding. Is that, okay, I'm sure some of you could buy some unit trust before. I'm sure some of you bought it before, or probably your friends or your family bought it before. And I'm sure that you hear very bad story, horror story from them, is that, oh, my funds actually lose 10% or 20%, some of them lose that 30-40% of it. So I feel very bad. And then it's like, how come those professional fund managers are so lousy? And in the meantime, I can pick one stock and generate 50% return. That's so lousy. But in the meantime, you realize that not many retail investors can actually outperform a fund manager. So people you tend to see there are different part. I mean, there are different sides of the story. So in real life, can retail investor really beat fund managers? The answer is absolutely can. Okay, let me tell you why. First of all, not talk about knowledge first. We just put the knowledge apart. There are certain restrictions that normal retail investor doesn't need to carry, but fund managers need to, like me or some of my peers, they do need to carry. Is that the first one? We call it the buy list. The buy list is actually something that is like It's like when you go to a restaurant, you want to order food, you can own the food you can only order from the menu. You can't order things outside the menu unless you go for something very, very customized or very high class kind of a restaurant. That is a different story. But normally, when you go to McDonald's, you can only order from the menu. In fund management services, it's the same thing. We can only buy the stock in the menu. We call this menu the buy list or the universe list. It depends on the company how they want to name it. But the concept is we can only buy from the menu. So in order to put things into the menu, let's say, for example, I discover a new stocks, I found something very good, I want to put it, I have to write a report, I have to justify it, I have to propose to the investment committee so that they allow me to put the new stock into the menu. So this process takes time. It takes very, very long time. And sometimes for bigger houses, bigger company, they may not even allow it because they may be very skeptical about the stocks or the new thing that you're trying to propose. So this will actually stop and limit the choices you have for fund managers. Whereas when it comes to retail investor, you actually can buy whatever you want anytime. So there's no such restriction being imposed on retail investor. This is the first advantage I think all investor has and fund manager doesn't have. Fund managers hence are not to say tight, but limited by the menu. That is the first thing. The second thing, the second restriction that fund manager has is that what is it called? We have a KPI. I'm sure everyone heard about it, KPI, whether current has the KPI system or other previous employment has a KPI system. This KPI system is actually it depends how you look at it. To some people think that you need KPI system to better manage people, but in fund management, a KPI system sometimes may not bring the best benefit. How should I? Why? Because every year when fund managers being evaluated for the KPI, one of the important things is that have you ever outperformed the market or outperformed the benchmark? This is one of the, or have you actually outperformed your peers? These are the few key criteria that need to go through for all fund managers. You like it whether you're junior, you're senior, you're CIO, all the same. So when it comes to performance, so you know that it's actually follow the calendar year. Everyone actually calculate the performance, whether it's 31st December or 30th November, like it depends which one you like it. It's the same thing. You have a cutoff date. But in real life, a business cycle doesn't follow a calendar year. A business cycle can actually start, for example, in August and then cross December and then ends in May next year. So it happens that what if that when you buy a stock, you are very confident that it actually will perform in the next 1 to 2 years, but it may not perform until you reach your KPI evaluation, see? So that time you will have the pressure that first you will doubt yourself, whether have you made the correct decision, and second that you don't know, shall you reduce the position, shall you sell some of it, or shall you buy more? You come to this kind of I would say the self-doubting processes, and then you may make a wrong decision. So this KPI will limit the way you look at things because you always evaluate your performance based on calendar year. But in real world, things doesn't follow calendar. Things follow cycle, and cycle can actually stretch beyond calendar, even 2-3 years. So this is a second restriction that fund manager has. But for retail investor, as long as the money you don't borrow to invest, is your extra money. You can actually hold it for 2-3 years or 5 years, 7 years, 10 years. It doesn't matter because it can even save. If let's say the money you actually invest for your children's education, you have a very long investment horizon, which fund managers doesn't able to enjoy. So this is an advantage I think retail investor has. And then the third one is actually that I think a lot of people forgot is that fund managers, we are actually employed. we actually, of course, we are professional. We actually try to do our best to actually to manage our clients' money. But at the end of the day, clients' money is still clients' money. Our money is still our money. It's different. But retail investor, once you invest, that money is your own money. What I'm trying to say here is, when retail investor invest, you are fully responsible for all the money you have. You make the correct call, you're able to actually enjoy the return. You make a bad call, you suffer the losses. Everything, you have full responsibility for it. But when it comes to fund managers, the so-called the sense of responsibility is a little bit distant from the fund manager himself, unless he actually has a very, very high professional standard or very, very ethical. If not, that he may not actually really feel the real responsibility of it. So that doesn't happen to a normal retail investors. So which means I think that normal retail investors, they do have certain advantage against fund managers, and with just that they need more time to actually to spend and study, and just to be more careful when I do things. And then I think the second choice is actually, the example is the Wall Street bets, which is one very famous that retail investor able to beat some of the fund managers. I think in early in 2021. So that's it. This is the 3 myths that actually I'm trying. I hope that you enjoy, and then that's it. Please if you have any question, please let me know.
Yep. Thanks for sharing, Zidun. Okay,
Yep.
we will now open up for questions. And if you want, you can type it in the chat box. Else, I will encourage you to unmute yourself and you can ask directly.
Yeah.
So Zidun, probably I want to start with this. So one of the I'm not sure, I will bring out again one of the things that I'm most interested in the book is when you talk about the Y2K bugs that happens on our year before the year 2000. So that was something I can relate to as an engineering, as a IT people. So, and looking at now, a lot of people are talking about inflation, recession, or this kind of stuff. So, and the news are like getting intense, and as soon as we open up the news, this is what we hear, right? Based on your concept, we say that based on the concept, if this is something that is been, if the public know about, it would not happen so badly. So what is your take about the inflation and stuff that is happening now in Malaysia, probably like in Malaysia as well, right? So let's put in the context.
Okay. For inflation, it's actually like, okay, how should I put it? The inflation, actually normally inflation is the driven by 2 things, demand supply basically. The demand is that last time the tradition, the conventional way of thinking, inflation is actually driven by demand, because the people want to buy things, they don't have it, people tend to pay more for it, so the price will increase. So this is a normal conventional way. But currently the situation is slightly different. It's actually a supply constraint. Supply constraint is also caused by 2 different reasons. One is actually real supply constraint, because some countries, like for example China, their production level is still not fully ramped up to the pre-COVID level, because China is one of the so-called manufacturing hub for the. So if let's say they're not actually ramping up the production, so it's actually it's going to cause some problem. This is one thing. This is one of the supply issue. The second supply issue is actually shipment cost. Shipment cost has actually very it actually increased a lot. It's actually a few fold compared to last year. I mean compared to if you compare to pre-COVID, it's even worse. Okay, just give you a context. One of the Malaysia ports, Westport. Port Klang is one of the Malaysia most important port. So Westport their largest shipment customer, the profit that they earn able to buy out the entire port operator. just imagine that the Intel largest client able to buy up Intel. This is how much the shipping company is actually earning. I'm bringing this to actually to answer the question is that inflation now is actually cost more on supply issues instead of demand issues. So supply issue, it needs some time for this slowly to ease off. It's actually hard for you to actually hurry in. I mean, to try to do some policy. I know the U.S. central bank and even European Central Bank, they're trying to do something, hope to tame inflation, but I think the effect won't be that strong. So inflation going to be stay for some time, and you need the supply to actually to ease this thing off. For Malaysia context, it's slightly different. We are quite blessed, I would say. Yes, we are quite blessed. Until today, I'm still pumping RON to 95, okay, which is a highly subsidized retail petrol. Yeah, for those who are pumping RON 97, I'm so sorry. You're actually the one who are actually subsidizing us. Yeah. So it's good that, I mean, one thing good here, so far good, is actually the government is actually there giving a lot of subsidies, which is especially on petrol, retail petrol. So that's why you don't feel very, very huge inflation, even though yes, your coffee ice, some of your food you order, may increase their price, but you don't feel that like other countries people felt. Yeah, so the things here is still better. And in fact, even electricity bill is also subsidized. Billy, you're currently at home, right? It's a residential rate, right? Your residential rate is actually subsidized by commercial building, commercial customer, which means Intel is subsidizing your housing, your electricity bill. I mean the entire mechanism. So this is a thing. So I feel that for Malaysia we're still quite okay. I mean, what I would suggest right now, do not splurge. Not to say don't spend, but be mindful when you splurge your money. Yeah, don't buy things that really don't need. Now is the time that I think that we should be more mindful of our financing. So just save more money. Yeah, and perhaps if let's say you're able to pay off your house, yeah, comfortably pay off your house. I mean, why not? Yep, this is the things that I actually trying to share here, and also I also share this with my friends. Yeah, just hope that people can able to benefit from it. Yeah.
Right. Thanks, Loon. So I get some questions from the chat, and if we will TikTok begin this thing now. If you all wanted to ask question live, and then after the question on chat, you can unmute and ask your question. So question from Hong Yi. I'm not sure you're able to answer this. For share price like Intel, can us the employee do anything with the growth of the price, or can we do anything for the growth and the price? Yeah, that's a question.
Yes, you can actually there is to be on. This is a very tough question. Okay, for big organization like Intel, everyone is important, but because the organization is so huge, so the contribution, the effect it will be very uneven, different. Depends on the position you are, depends on the department you have. Yeah, but what I can share is that for Hong Yi, there's a chapter in this book. It's actually I'm talking about cash flow. The cash flow mindset is that I'm not sure the background of Hong Yi. Probably you're from IT or doesn't matter. And as long as it's not from as long as you're not from finance, you won't able to. Sometimes you may not able to understand the cash flow concern of the company. Company tends to actually hope to do good business, sell good products, collect cash on time, and delay their payment to their suppliers, manage an inventory, and at the end, so that they have sufficient cash to invest for the future, the new projects or products whatsoever, and perhaps pay dividend to shareholders. So the cash flow is actually something very, very important. I'm sure that you, Hong Yi, or some of your friends may have came across some experience that when you try to propose something, we should do it, boss, we should do this. But this proposal, when go to the board or go to some approval, it got rejected. Basically because that they need the company see things from revenue and cash flow perspective. Yeah, not all good products. Some products are very cool. I mean, by technology itself, it's actually very, very cool. But if the company can't understand how this cool stuff actually brings cash flow to the company, they may hesitate to invest into it. Yeah, so I think if you're able to think more towards the cash flow things, how the company generate cash. I'll give you another example. Some companies they may have different products. Some products are easy to sell. Some products are hard to sell. Those products who are easy to sell, the salesperson may, keep promoting these kind of products, but they may not realize that all these easily sell products may not bring good cash flow to the company. But because the company needs more things to achieve the turnover or the profit, or probably it's because the inventory really has some constraint on the inventory. So these are the things that I just hope that for non-finance backgrounds people to understand better, so you can stand on a more holistic way, more to look at the companies. If you really don't want to know what an employee can do, I think I would suggest you to read up Intel annual report. I'm sure you have annual report, your group annual report, and look at the revenue segment, which are the products that are selling better, they're selling more. Look at the chairman's statement, what are the things that actually the challenges they highlighted, what are the things he actually excited to look forward. All this is actually a hint that which direction Intel is heading towards. So perhaps then you try to link it or connect it to the job that you do. Then perhaps maybe you can get a better sense of it. Yep.
Thanks, Loon. So anyone want to unmute yourself and ask the question? Even you have put in the chat, because we are a long list of questions coming in. Yeah.
Okay.
Yeah. I will see. Give a chance for those that want to speak up. Okay, if not, I pick the second one on the list. Okay, so what is your criteria? What is your criteria to choose the right stocks to buy and hold in Malaysia?
Okay,
probably.
For Malaysia, buy and hold strategy is buy and hold strategy. Okay, there are a few things I will need to think through whether to do buy and hold or not. Is whether the industry has a long-term demand. For example, in Malaysia, financial services is a long-term demand because it actually correlates with, it actually link very closely with our population and also our income growth. Financials services, things like consumer products, you can actually look into it because you need some certain consumer products. Depends on the state and which stages of your life. Yeah, but you may not consume it, but some other people will consume it. So consumer products has the long-term demand from it in Malaysia. There are sectors who are very cyclical. Cyclical means that it's up, down for a very, very long period of time. This kind of things, sectors, for example, like construction, you just can't buy and hold. It's very, very difficult. Yeah, because construction, at the end, the Malaysian construction sector is actually rely heavily on the government's budget. So as long as if the government budget is not really at a very good surplus situation, I don't think that you have a lot of mega projects being announced in Malaysia. So construction sector is probably not something that you want to look at if, let's say, you want to buy and hold. I would suggest you go to the website called Bursa Malaysia. Inside it, you try to search indices, INDICES. There are a few. Bursa Malaysia has actually grouped different sectors into different indices. Look at the indices, the chart for the entire tenure, then you get a sense that what company has a long-term performance. that actually implies the long-term demand of the Malaysia, of every ordinary Malaysian. So probably you can get a sense from it now.
All right. Thanks. Thanks, Dylan. Anyone ask a question? Okay, if not, I go to the next one. Dylan, what is, I think this is very open-ended, probably one or two of advice. What is your advice for newbie investment? This is very broad. Very one or two advice.
Okay, there are a few things. Yeah, I suppose it's quite open-ended. I'm not okay. I can only advise you what not to do. First, do not borrow money to invest, because it will actually your patience level will drain out very, very fast, because you need to pay back the loan, and perhaps interest rate as well, interest expenses. So do not borrow to invest. This is very, very dangerous thing. Only very handful of people able to master it, and some actually fail drastically at the end also. So please don't do that. Invest with your extra cash. Do not I'll always suggest that people have some reserve first, for your emergency reserve, like for example 6 months, and anything extra, then you can invest. Okay. Then the third thing is that do not buy into things that you don't understand. Yeah, but somehow I feel that for people in Intel, there are not many things that they don't really understand, just that whether they want to spend the time or not. Yeah, you understand very complicated engineering stuff, which I may not be able to understand also. So, but don't try. Try something that you are actually familiar with, you have interest in it, and then understand risk appetite, whether you're a high risk taker or low risk taker. Yeah, this is very important. And then perhaps if you are okay enough, you can consider some unit trust as a tool to help you, because they help you to save a lot of time and so-called time, and what you need, effort, because you have some so-called professionals to help you to filter something. So if you really don't have the time, you may consider a small portion of unit trust. Yeah. So don't borrow and invest with extra cash, understand your risk appetite, start with something you're familiar, have interest in it. That's the advice I have for newbies.
That's very good perspective to look at things rather than what to do. Probably start with what not to do first, so that at least it's on the safer side, right?
Yeah.
Or engineer wants to be safe.
Yeah, reduce the chances of failure.
Okay, all right. And anyone to ask the questions? Give an equal opportunity.
Can I ask?
Yes, go ahead.
So my question is like, what's your advice for someone who don't want to do the day-to-day trading, but interested towards more long-term, like buy and hold for a few weeks or months, right? What kind of target ROI should one person set, and how frequent the person should keep in touch with the market and readjust the portfolio?
Oh, there's a 2 or 3 questions there.
Yeah, I think it's more on the execution part, right? Okay. For myself, I'm not able to trade. Not to say I'm not able to trade. I don't know how to trade, to be honest. In trading, all the technical charts, you draw line here and there, crosses here and there. That is not my field of expertise, to be honest. So I can't really do those kind of short-term trades. So what we do is actually, when we buy stocks, there's a concept called margin of safety. Margin of safety is basically like this. It's very similar when you want to go to a hypermarket, want to buy stuff. Someday you may actually reach a supermarket or hypermarket that you realize that certain things are selling very, very cheap on discount, 30% discount or 40% discount. You may straight away grab the things without surveying more. But you are not afraid of buying it too expensive, because you know it's on discount. So this is even though you may find it cheaper at other places, you still don't feel that bad also, because you bought it with a good bargain. So the margin of safety is actually the concept of this. It's actually whether have you bought the things in a bargain or not. So if the company worth 1 ringgit, you should look for the company when actually the price is selling like 70 cents. Then you actually have some buffer. Even though the share price goes down to 60 cents, you still know that it's worth 1 ringgit. Yeah, so your confidence level is there, so you won't worry too much on it. So you just need the time to be on your side, and then slowly the share price move back. Probably you just move to 90 cents. You bought it at 70, you move it to 90. The 20 cents is still considered like approximately a third, like 30% return. Yeah, so it's not too bad also. So you should consider margin of safety. I would suggest a 30% margin of safety discount from the value of the company. So there are a lot of theories on the market. How do we evaluate the company's value? I think you can easily searchable. You just Google it, price to earnings, price to book, this kind of stuff. You're able to find it. Yeah. So just be mindful of margin of safety. And then normally for professional like us, we do hold shares easily, I would say 12 to 18 months. Sometimes some of them is even longer, 3 to 5 years, which is not uncommon, I would say. Yeah, we are very hard for us to do the timing, try to time the market. It's quite hard. So we don't do short-term trading. These are the things. And that's why I say that for normal retail investor, you have advantage to actually the whole longer period. So do not waste this advantage, I would say. Okay. And in terms of ROI, what sort of ROI you should look for? I would suggest things like this. We would not want to buy into a shares which only gives us 10 to 20% upside. Okay. For example, somebody suggests, we have a lot of analysts on the market. Some analysts that write reports, they suggest that, Zillow, you should look at these shares, this company ABC. It's actually selling 1 ringgit now. It's worth 115. According to my calculation and projection, it's worth 115. So it's a 15% upside. So sorry, I won't buy into these shares because I need to include the risk and metric taking for it also. What if it doesn't go through 115? It goes to 90, it goes to 80, it goes to 70. So I have to consider both the upside and the downside as well. If the upside is not substantial enough, I won't go into it. So when you do investment, try to aim for something 30% or more. And of course, I mean, why you want to aim so high? Because you need some buffer when you make mistake. For example, you buy 2 shares, one of them went up 50%, one of them suffered like 20%. You still feel okay because add up net, you still get around like 20 or 30%, depends on your weightage. So you need to have good substantial upside to cater for unforeseen downside. So fund management is actually a capital allocation game. Yeah, so it depends how you allocate the capital, the money for it. So this is the thing that we actually look at. And then ROI. So ROI, I would say that if you're able to generate 10+%, 10 to 15% in 1 year, I would consider it very, very, very good. It's actually, I think you are above average or above kind of level in the professional world. Yeah. So please do not fall into those scams that actually promise you like 20% return per month or whatever. Those too good to be true things, please do not fall into that. Yeah, those are, I would say 99% are scams. Yeah. And then the last one is the market. I would say that we do need to read news every day, and then we'll try to understand the market. And then so because you have limited time as well, so do not buy too many shares. Try to keep it less than 10. Yeah, so that you're able to focus. Focus is the key. Yeah, you don't need to buy like 30, 40 shares. It doesn't help. Yeah, 30, 40 shares doesn't really brings good benefit. You just need to focus. So yeah, that's the thing I have for.
Right. I got one more question from the chat. So it's probably one of the strategies. Yeah. Okay. Who's talking?
I can ask a question.
Okay, I just
Yeah,
want to
yeah.
ask for margin of safety. What is your preferred indicator to calculate it?
Margin of safety, okay, margin of safety, normally I would take 30%. 20% to me is too little. Anything more than 30 is something very hard to ask for. It's actually based on historical Malaysia KLCI index. I actually run through a few times the analysis. I realized that in order for the KLCI, let's say for Malaysia, in the Malaysia market, KLCI is the big cap index. If the big cap index actually for it to fall 20%, not to say it won't happen, but it won't happen always because you need a lot of shares to fall together. So 20% is something that I would say quite, yeah, it happens sometimes. But for it to happen to fall 40%, it is quite difficult. I would say even during Asia financial, the global financial crisis like 2008, 2009, the KLCI index actually fall around 50%. So I will not think that Malaysia economy is that bad. So I do not expect it happen again, or not to say it won't happen, but not in the foreseen term. So 50% is quite huge. So 30% will be something just nice in between. Yeah, because I need to have slightly more buffer than 20%. So I'm using 30%.
Sorry, let me clarify my question. What I mean is, when you calculate margin of safety, do you use like PE or price to book or price to sales? Things like that.
Oh, okay. So your question is how I evaluate the company's value lah. Okay, PE is the most common that I will use, and actually most of the company we can use PE, but not all industry we can use PE. I'll give you three difference in some examples. For example, banks, we can't use PE because bank the most important is their loan book they have, so we use price to book. Insurance, we use price to book. Some company which has a lot of machineries, but probably not really profitable. For example, like steel making company or cement making company, this kind of company we use PB. Yeah, because we try to have a more not a very bumpy average line to look at it. These are a few things. These are a few situations we'll look at price to book. Other situation we'll look at price to earning, which is the PE. Price to sales is something that I know is quite common, but we hardly use it because it only used on those company who has no profit, which is I think is quite a risky move lah. When a company wants to evaluate its share price using price to sales, I think it's something very, very risky. Normally, this kind of company I wouldn't invest into it. For example, Twitter. Yeah, when they go for IPO listing, you actually use price to sales, which is something I found it very, very hard to actually to accept it. So PE, price to book, which is something very common, but just that as what I mentioned, some situation you won't use price to earnings, some situation you will. Yeah, hope that clarifies.
Can I ask a question?
Go ahead.
Okay, so you mentioned there's two things. A retail investor with very limited time and resources, there's two things we can use. We can go into stock market and pick less than 10 stocks and study them.
Yep.
And then the next one is we use a unit trust manager, right?
Yes.
How about how is the market to use a private investor, private investment manager? Something like somebody like yourself, we give you a private portfolio, and then you do everything for us. So how's the market in Malaysia for this kind of service?
Actually, Malaysia, yes. Okay. Actually, what you say is correct. We actually offer this kind of service, and I think most of the asset management house on the market, they have this kind of services as well. Yeah, just that they don't publish it. So I mean, they don't promote it so widely because what is it? For example, one of the most famous unit trust company in Malaysia is Public Mutual. Public Mutual I believe he has this kind of a private to help private investor investment service for private investors. But to them, the unit trust business is more important because it generates more stable income for them. So they promote this widely. Yeah. Whereas for us, we don't have unit trust at the moment. We plan to launch one, but not now. So at the moment, we only offer like a private investment service for clients. So if let's say client comes to us, they park a sum of money with us, then we will invest for them. Of course, we will charge some fees, but I think that is it is very common and depends on the company. So yeah, if you really want, you can actually look for our website, TradeView Capital. You can drop us a message if you really wants to. Yeah, we can reply you from there. There are some people who prefer that way. We have some high net worth client who actually prefers that more bespoke service.
Alright.
Thank you.
So we have a lot of questions, so I would like to ask a favor. Those that you all read through the question, if those that you like, right, give a thumbs up. So I will only read the one with thumbs up one. So yeah, so please vote for your question. So the next one in line is that Loon. So if buy and hold is not one size fit all strategy, what are the other strategies that you can use? Probably 2 or 3 strategies that can be used.
Okay, to follow up on that, there's no strategy can actually one size fits all. All strategies have different pros and cons. What you can improvise from the buy and hold strategy is that once you actually reach, you do keep track of the company news and the company share price movement. Once it actually reaches your target, let's say for example, you bought the stock at 1 ringgit, the target is 150. When it reaches 150 or close around that, you can consider to actually close the position. Yeah, unless there are some, you revisit your thesis, your investment thesis. If you think that now 150 because the company has new thing which is different from what I didn't review it previously, so I think now the target price is 2 ringgit. Yes, you can actually still continue to hold on it, but what I mean is that you need to review your position periodically. Yep.
So it's much more about the homework that you need to do rather than
you just download some apps and then make sure you have a push notification for some news to you. That's it. Yeah, okay. and then every quarter they have result. Then you probably, I think it's less than 15 minutes. You can spend your time to look at the quarter results. Just every quarter. 1 year is less than an hour. I mean, it's around an hour. Yeah.
Okay, Zilon, this is another myth question from Ziliong. Said that is it a myth that the US S&P always goes up in the long term?
Okay, this is a very good question. S&P, I can't say that it will always go up in the long term. But I also can't say it won't. Okay, basically it's like this. When you buy S&P 500, you're actually buying the future of the country. And the US S&P 500 is actually slightly different from the Malaysia KLCI. It's because it has a lot of innovation. It has a lot of IT companies. It has, like, for example, Apple, you have Netflix, you have these kind of companies in the index composite. So the share price, it can perpetually grow the index for US. It will not go forever because we do see that recently it has a lot of very choppy performance. And then we also believe that there's another growth engine coming from Asia, which is China. Perhaps you can have a look at it. Yeah, but it may not go up forever. You have choppy times. It actually depends how productive the Americans are. If you sincerely believe in their future, yes, you buy into it because their index is more. The S&P is more adapting or more representative because it has better new businesses, new business model in it. Malaysia one is very different. Malaysia one is very old economy style because you look at the KLCI index, you have your banks, you have your plantations, you have your telco. Not to say they are dying business, but you only have one so-called tech company which is called Inari, but it doesn't help to bring up the entire index. It's very, very different. Yeah, so yes, that I hope you can understand the differences and then decide on it. Yep.
Right. Thanks. Question. If not, I want to pick up this. This have 7 votes. Okay, the 7 from Nankun. He said that, do you have any recommendation of good PRS products that are related to equities and REITs REITs with good track records of PRS fund managers that are able to generate consistent ROI annually for retirement goal? So yeah.
Oh,
Tough.
okay. Okay. This PRS is a private retirement scheme for those who are not Malaysian. Okay. I would normally I wouldn't suggest people invest in PRS unless there's the only good thing to invest in PRS right now is actually the tax incentive, the tax relief that you have, the tax exemption. Yeah. Other than that, it is little bit hard. I mean, because it actually related to our retirement fund, which is EPF money. So when things comes to EPF money, the comparison, the competition is very cruel because you always compete against EPF return, which is average around 6% per annum. So I don't think any unit trust fund on the market can be so sure they can deliver 6%. They may deliver more than that this year, but probably down a little bit next year. Yeah, I don't think most of them can actually deliver consistently 6% return. So I would suggest I'll give it a pass for PRS products. I'm sorry to say but you need better products and more incentive so that people are feel more encouraged to invest into PRS. Whereas if you do one thing, if you really want something that is very, very stable, and yeah, I mean that what you say, REITs, which is a real estate investment trust, is one of the tools that you can look in it. Yeah, that one can actually give you a consistent dividend. Yeah, just be mindful of the price that you enter. Ensure the dividend yield that you are getting is actually good enough. Please do not buy dividend yield that actually, REITs with dividend yield that actually quite close to your FD rate. That is not worth with the risk appetite there. Yeah.
I have a question.
All right,
It's a very up-to-date question.
Uh-huh.
It's a very hot topic right now in Malaysia. Okay.
General election.
No. It's a very hot topic. I don't know if everybody know. There's this thing called cash trust, using a trust mechanism to invest. What is your advice on trust investment? Using trust as an investment?
Okay. Basically, okay, like this. Cash trust is not something uncommon. I would say, not something uncommon. Most important to me is that so far I can't see any details of the investment. Because it seems like something that you can only get the details when you talk to the personnel, to this trust company personnel. So I am not able to tell. But okay, what I've been very sure, there's no guarantee fund in Malaysia. SC literally prohibits any unit trust company or any investment management company, prohibits them to actually to use the word guarantee. Last time they launched, I mean, some old days, like 10 plus, around 10 years ago, they have a lot of funds we call capital guarantee, which is they guarantee your capital and then with certain potential upside. But this term guarantee, you can no longer use it. So they changed it to capital protected, which is also very low risk investment and the upside is uncertain. So what I'm trying to say is that anything that actually guarantees certain returns, it's not true. And I'm not so sure how all those investment in this cash trust company does. Yeah, so I can't advise on that. I have to really look through what in their investment strategies which I think currently is not available on their website. So I'm not able to comment on that. Yeah, and but I know I read some news about it. So I will say I'll be more cautious on it.
Another question, and the second most hot topic now is private equity investment. So you have companies like, they actually like marketing companies. They will introduce you to have a corporate term note or maybe like a RPS, preference share, in directly into company. So instead of going out to KLC, you get a stock in directly into companies using a private equity approach. And the margin of entry is very low. It's 30,000, 20,000 you can enter already. So is this kind of thing in your portfolio?
Okay, our portfolio, we can do private equity investment. We can invest into Sentiran Berhad, not a public listed company. Yes, we do, but still looking for a good target. I mean, a good target is not that easy to acquire or to buy a stake into it. Not I know everyone trying to find the next Mr. DIY, but it's not something very, very easy searchable right now. So yes, our company offer that service. But if you want to talk just to invest alone into private equity, there are certain risks you need to be mindful that you may not able to liquidate your position in a certain time frame, like probably 5 to 7 years. Yeah, so you need to be very mindful of it. And then the valuation could be very, very, it's hard to determine because it does not have a publicly available market price of it. Yeah, it's more human judgment. So have to be mindful of this thing. I hope I answered your question.
No, I'm just asking about your portfolio. Do you
we
do this kind of thing or not?
We do this kind of thing. We do private company investment, but just that we are still looking. Looking for the target.
Hey, Tontin, I think after this call, Zilum maybe Tontin he want to subscribe to your service.
Well,
Alright,
so we open for business lah. You always
go to
come.
the broker.
But the reason I raised the question is to let everybody know that what you mentioned as a standard KLC and unit trust, that's not true lah. There are a lot of other things in the market, and they give better return than KLC, safer than KLC.
There are a lot of, yes, what you say is correct. There are a lot of investment tools on the market. Just like KLC is the very commonly used examples. Yeah.
Okay. Hey, Zillow be ready 11:30. I think we are still a few of thumbs up. We go through all this thumbs up question. Is it okay? All right. So Wanjing asked about this thing. Have 5 people like to ask this question. So talking about scams, we always see there's gurus in YouTube or even some stock classes event. What is your opinion for newbie to choose wisely?
Wow. This answer will offend a lot of people. Okay, I don't want. Okay. Put it this way lah. If you're able to read books, able to absorb the knowledge from it, I would suggest you go for the books. I can later suggest to build a list of books that I think is highly recommended. Yeah. So if you, I do think that because I realize there are two group, not two group of people, those who actually participate in all those stock classes events. Most of them, they share something in common, is that they cannot understand, they cannot extract the knowledge from the books. They're being very impatient. Yeah, they just want somebody to stand there and teach them and tell them. Yeah, so But if you're not this kind of people, you can sit down quietly, read a book, or even listen to the podcast. I think that you can actually opt for books or other resources. Yeah, because to be honest, I have seen some of these gurus classes materials before. Yeah, friends have shown me before. So a lot of them are very, very common things. Perhaps you can find it in the first 2 pages of the Google search. Yeah, first 2 pages of the Google search. It doesn't take you much effort. Yeah, so I would suggest you go for the books first. Then only you look, because it's too wide, you know. Everybody is actually promising certain things. They're actually showing the bright side of their classes, that with this thing you actually move your 6-figure portfolio to 7-figure easily. Yes, it could be true, but how it could be an exception case. Yeah, the problem of this is a lot of people that exaggeration or misrepresentative is that they try to normalize exceptional cases to make it, to tempt people to subscribe to it. So I think if you're able, just be mindful of it. And okay, if you really can't, you really want to go to one of the classes, go with the cheap ones, perhaps nothing too far from 1,000. Yeah, keep beyond your means. Yes, because I know some people, they charge you 5 figures. When you join them, they upsell you another courses and keep upsell you. Yeah, so at the end, who is the millionaire? They are the millionaire. Yes. Yeah. So just try to look for those cheaper ones. Not to say cheaper ones it's better, is that it's beyond your comfort level. Yeah. Yeah. Yep.
Thanks, Loon. We always encourage people to read in the book club. Yeah, that is a very good advice.
Yeah, I can later suggest you a list. If let's say people are interested to know certain topics about investments, I can suggest certain books. Yeah, local, foreign. Yep.
Okay. All right. Dylan James asked again, with people like it, is that can you analyze Intel from your point of view? What is the cycle and how much it is dragged down by the sector or market? Now we are 38, I think 38, like maybe 40% drop from the highest, I think.
Wow. Intel. Okay, to be honest, I can't really provide. Okay. Share price movement has actually dropped a lot. I think not only Intel dropped 40%. I think most of the stock, a lot of share actually dropped. Apple also dropped. AMD dropped. Every damn thing dropped, basically. The drop of all this is actually basically, I feel that it's just a temporary risk off, because a sentiment thing, because people are so afraid of the interest rate hike in the US, which is because they try to tame the inflation, which is something that is very hard to do, but they try to. So that, but that is on the expense of higher financing costs, higher interest expenses. So people are withdrawing their cash from the market or try to take profit from the market, so that they can actually have sufficient cash to actually to ride through the tough period, the turbulent period. So, but Intel as a whole, I know that, I mean, you have a frenemy relationship with AMD. Yeah, so as a consumer, I do hope this continues because it benefits the consumer. Yeah, but I would say that Intel needs more innovation, to be fair, because I do think that a lot of companies, they're now looking into self-sufficient instead of sourcing materials from others. If I'm not mistaken, I think Apple used their own chip, right? Instead of sourcing from Intel, right?
M1,
so the M1. Apple is a very special case because they're able to build a very holistic architect for their components. But this may trigger some company to rethink their strategy. So I think Intel probably need to move faster. It is still the giant today, but the giant need to run faster. Yeah.
Any question? Okay, so there's a question from Sulin. You mentioned about paying off the housing loan just now. So the question is that should save money or pay off house first?
I remember my context is that if you can easily pay off your housing loan comfortably, you can consider that, because of financing costs, we foresee the financing costs may stay high for some time. And because I'm not so sure when you bought the house and how much left. For example, if let's say you left 10% to pay off already, then yeah, it's not a big deal. But if let's say you just got your loan, I'm advising you to pay off 90% of the loan, then it's not something very advisable. Yeah, so it actually depends, and it also depends on, do you have any good use of the money? If you really have something you want to invest, because since you asked the question, it means you have money to pay off the loans, and I assume that you're in a very comfortable cash level. So yeah, I mean, why not look for some cheaper bargains on the stock market? Yeah, in the meantime, yes, you can slightly pay off more, but yeah, also look for investment return. Yeah, I mean, things won't go. We are not living in a binary world, the 1010. We actually, there are a lot of hybrid approach. Yeah, I would say it depends on the situation. Sulin.
Question from Frida. Even though I read your book before, I want you to answer. Does your book covers which category or when to use PE, price to earning, price to book, or price to sales ratio?
Yes, I do. There is a chapter I actually break down clearly what sector to use. I have listed down some of the most commonly used valuation method by the finance industry. So, and then I also mentioned that which company suits, what sector suits which valuation more. Of course, there's no one size fits all. Like just now, there's a friend asked, they said you when to use PE and price to earnings and price to book. Yeah, there's no one size fits all. But that is a more holistic view. You can actually have, is in one of the chapters. I forgot which chapters already. Yeah, but since you mentioned, I know you remember the chapter lah.
Yes, there's it. I kind of like that. I kind of like the breakdown. So I think there's 6 or 5 kind of breakdowns in the table format.
Yeah.
Right. Okay.
Yep.
So there's a question. Okay, let me go to the 3 one. So from Xie, if I got this correctly, what do you think of options? I assume it's a option trading. Yeah.
Yeah. Options. Okay. Option is something very common. Okay. How should I put it? I don't know. I don't know the intention why you're asking this. I'm sure that you have seen some option strategy advertisement. I understand from Facebook, from YouTube, Okta FX. I've seen a lot of all this kind of weird. Options is something very safe, so-called safe to invest, because you only pay a small amount, but the return can be quite high if, let's say, you choose to exercise your options. But the problem of options is that a lot of all these courses or a lot of things people tend not to highlight is option will expire. Options value is good until it expires. Yeah, you may have an option to buy. Let's say you have a call option to buy Apple like $150. So you think that once you reach, then you can buy. But the problem is you don't know when Apple share price will go back to 150, and but you know clearly that this option is going to expire in within next 6 months. So if, let's say, the next 6 months Apple share price does not move until 150, then what you have paid for the option is burnt. This is the thing. Yeah. So, and option strategy it can be very complicated. What I mentioned just now, the Apple case, is a plain vanilla strategy. It can combine, become a bull call, become a butterfly. There are a few different strategies that you can apply to, but it's not something very common in Malaysia market, because Malaysia we don't have options, we have warrants. Yeah, is something I think is being promoted by a lot of online courses. I mean, but most of them is actually in the US lah. Yeah, which is a market that I don't really understand that much. Yep. Oh, I hope I answer your questions.
Thank you. So, and as an engineer, we always like complicated stuff.
Yeah,
The
because
more complicated.
it gives me because it gives the audience a very great impact. Oh, this thing is like, well, I can go here and there, and then it's like it is something very, very fancy lah. I know a lot of people look into it lah, but a lot of people forget about the expiring part. Yeah.
Right. Okay, we take 2 or 3 questions more and open up if you want to ask the question immediately, right? From Shin, he asked that, do you know where to consult a recognized or certified financial advisor to plan for their finance? I think this is kind of straightforward also.
Where to consult? Wow. Okay, there are some so-called independent financial planning house. Just for example, one of them called VKA. But I know that because I have a friend working there, so called VKA. So they may have certain certificate certified financial planners who can help you to look review your insurance policy, probably your mortgage, your investment, unit trust, your retirement planning, all those stuff. So yes, you can consult them, but I would suggest that there are things that you need to be you have to rethink. Is that why you want to consult them? Are you consulting for tax purposes? Are you consulting for your children education? Are you consulting for your insurance? You have to be very, very clear on what you're looking at. If not, I don't think the consultant is able to help you, because if you yourself you don't know what you want, then yeah, perhaps that person can't really help you. So yeah, you can try one of these avenue. Other banks, I mean, banks, they have their so-called their wealth manager or their relationship manager, or even financial consultants. Yes, they can provide that about this kind of services to you, but it has some I would say not to say flaw, but limitation. Is because like what I said before, everyone has their own menu. If the things you want is not in their menu, they are not able to help you. Then you have to go for different places for a different set of different requirements. So they can only help you within their own set of menus. So you have to really understand, think through the products they recommend, whether it suits your needs or not. These are the things that I actually would suggest to it lah. Yeah. I mean, if you really don't know where to look for, I think you can. I think there is a MPSC. I think if I'm not mistaken, it's the word MPSC in Malaysia. MFPC. Let me search for one more. Just give me a moment there. Yeah, the website called MFPC, Malaysian Financial Planning Council. You can just search, ask for recommendation from there. It's a legit website. It's a legit council. Yeah, and also also ensure that the person you deal with has license. Yeah, just make sure this thing. Yeah.
Thanks, Loon. We get 2 more questions. Anyone to speak up?
I have one question to ask. As when I was young until now, everyone was saying that you have a property for your retirement, then it's better. But I'm thinking that if you have a properties and you rent out, then there is a hazard all the times. So if I rather than put my monies, extra monies into the markets or into the mutual fund, what is your opinion on this?
So you actually have a property lah, I assume. Since
yes, I have. Yeah. But
Okay. All right. If you have a property and you're already renting it out, you have the landlord, you're collecting something, I will suggest you to keep it. Normally, I would suggest people to keep it, not because if your situation, if you have bought the property like 20 years ago, I think the property price has appreciated quite a fair bit. Yeah, so which means that the rental you're collecting now is actually the rental yield is quite, I would say, quite lucrative compared to FD rate. So just keep it. If let's say it's a landed, please do not sell it. Please be mindful for one thing. In accounting terms, land don't depreciate. Only property depreciates. Building depreciates. Land don't depreciate. So if let's say you have a landed property, try not to sell it. Just keep renting it out. Yeah, you have some hassles managing it, but it's fine. It's totally fine. Worth the effort now. If you really have more than one, and let's say for example, you want to sell it, I would say that try to split your money. If you really want to try stock or mutual funds, try to split your money between a small portion. I mean, it depends on your risk appetite. I mean, split it between mutual funds and stock market. And for stock market, you can buy locally, buy the local market. For stock market, you choose those which invest in overseas market, because if just from my point of view, just a point of view. If let's say I can able to analyze, I'm staying local, I'm staying in Malaysia, I understand Malaysian companies, I know their products, I can see directly face to face, I have more first-hand news, able to analyze it better. So perhaps I don't need a Malaysian unit trust fund, but I may not understand China market because I don't stay there. I may not understand the US market because I don't stay there. So for mutual fund, I may buy a China fund or a US fund. So yeah, so this because I have different to have more different market exposure. This is the thing. And then when you buy into unit trust fund, please buy thematic related fund. What I mean thematic is that fund, it looks into specific sector, technology, finance, consumer. Please do not buy, not to say this fund are not good, is that the fund manager has less flexibility because they can, let's say you buy a financial fund, you can only invest in financial companies. If let's say it's a down cycle for financial companies, then I'm so sorry, you actually can't make money, even though the fund manager is actually very good. So try to have a less restrictive unit trust fund. That's what I did. And then for stock market, I think the advice as before, go to those sectors or companies that you understand better. Yeah. I see your actual reply is a low cost flat rented out. Yeah, I would suggest actually continue to keep. I mean, because a low cost flat. Okay, yes, a low cost flat may not able to appreciate that much compared to others. But the rental is actually quite good. I mean, it has rental income. Then yeah, and because of the price appreciation is not that huge, then selling it may not serve the purpose as well. Yeah, the rental is better. Yeah, I hope that helps. Siling.
That's what you call cash flow,
Yes. It actually very. I found I'm actually don't know how to. I'm quite worried. I mean, giving this kind of suggestion or advices, because I think real situation is more complicated than what they have mentioned. Yeah.
So open up. We take one more last question. Open up. Else, I will give it one question from the chat. Anyone to ask the last question?
I have one question. So there are two sides of us, right? One is a consumer. When we visit a shop, we are a consumer, and suppose we own the particular product stock, and then we are also an investor. So when I enter in the shop, example like Puma or AMD or Intel shop, how can we read the pulse of the marketing strategy? Like if the is there any tips like if the company is granting a lot of product discounts, or they're spending a lot of money on the product, or effectiveness of their marketing strategy? Are there something that you suggest to read, or you as a professional investor would read those things and suggest us?
Okay, let me try to summarize your question. Is that how are you able to relate or to understand the consumer, those listed companies, how well they do by actually looking at the products? Is this understanding correct?
Yeah, something like that. Yes. So how is their marketing strategy and their spend? How can I understand whether the company is doing good or not? Yeah, by looking at their marketing strategies.
Okay, yeah. Okay, the first hand, the most straightforward, the first material you can have is actually from the company's annual report. Most of the time they will mention in the chairman statement and also perhaps the CEO statement, which is fall under the management discussion and analysis part. You can actually find they may mention some of the brands or some of the projects or things that they think they did correctly, or they make mistake, or they suffer losses. You can actually read it. It gives you some sense of it. And then if let's say the company, whether do they upload certain products breakdown, I don't think they do. They may list down by category, but not product by products, because they have too many SKUs, then it's very hard for them. So they may leave that premium product or their apparel products, something like that. So you can actually read through it. So this is something you can look for. And then another one is actually to read some analysis report, the market survey report, because you may, the products, if let's say it's actually manufactured in other countries, or let's say it's from other countries that you are not familiar with, reading these reports may help. And the third one, I think, is very important, which is ask around your friends. For example, somebody says that this product is, or this company is going to sell this product, very, very good, blah, 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 blah. Okay, but you realize that none of them buy this product. Even including the person who promotes it, he doesn't use that product. Yeah, so that tells you a little bit how well the products are actually doing. Yeah, you can actually this is ask your wife, ask your daughter, or ask any female colleagues or any whoever who likes shopping. Maybe yourself is like, I mean, our friend here likes shopping as well. Yeah, do some market survey. Perhaps you go to the shopping mall, have a look at it, see the store, how many people are doing, a lot of people buying, who are the people are buying. Try to be more observant. Yeah, shopping malls or their retail outlets. For example, Starbucks, you can check whether the flagship store nearby your house is the crowd has increased or decreased. Yeah, then it gives you some sense, or have they introduced a new product, and then perhaps you want to spend some money to buy the new drink, the new product, you try it out, and it's like, not really good, something like that. I mean, that gives you a more, a more holistic or more straightforward feeling of the company marketing strategy or product innovation. That helps a bit. Then after that, you check their quarter result, see is the result matches your expectation or not. Yeah, then slowly you know where to look at it.
Alright, this is what we have for today. If you like this video, you want to check out a few videos that we have posted over here, and do like and subscribe to us, because we are going to have a monthly book club sharing, and we are going to share content like this every month to you. Alright, catch up with you. See you.